A phone call. Just one phone call. It happened around Thanksgiving. Late at night, when most of America was digesting turkey and watching football, someone in China picked up the phone. They dialed a number in the United States, and when the person on the other end answered, they asked for something that would change everything: silver. But not just a little bit of silver, an obscene amount of silver. That's the actual word that was used by people who know what happened. Obscene. We're talking about quantities so large that if China got what they wanted, it could have shifted the global balance of power overnight. Now, who did they call? Most likely JP Morgan, the biggest, most powerful bank in America. And you know what JP Morgan said? No, just like that. No, you can't have our silver. But here's where the story gets absolutely wild. Because saying no to China wasn't the shocking part. What JP Morgan did next was the real bombshell. See, for the last 15 years, JP Morgan has been doing everything possible to keep silver prices low. They've been shorting silver, manipulating the market, doing all kinds of shady stuff. They even paid almost $1 billion in fines because they got caught rigging the silver market. $1 billion. That's not a speeding ticket. That's serious crime money. But suddenly, right around the time of this phone call, JP Morgan flipped. They stopped betting against silver, they closed all their short positions, and they went long, fully long. That means they're now positioned to make absolutely massive amounts of money as silver prices go up. And let me tell you, silver prices are going up. They've already exploded. But this is just the beginning. In the next 30 minutes, I'm going to walk you through exactly what's happening step by step in a way that makes complete sense. You don't need to be a financial expert. You don't need to understand complicated market stuff. I'm going to explain this like I'm sitting across from you at a coffee shop, just having a conversation. Because this story, it affects everyone, whether you own silver or not, whether you care about markets or not. This is about the future of money, power, and who controls what in the world. So stay with me. Let's figure this out together. Welcome to the hidden economy. I'm here because I believe people deserve to know what's really going on behind the scenes in the financial world. The mainstream media isn't going to tell you this story. They're either too scared or they don't understand it themselves. But you're here, which means you're someone who wants the truth. So if this is your first time watching, do me a favor and hit that subscribe button right now. Turn on the notifications, because the stuff I cover here could literally change your financial future. And if you appreciate someone breaking down complex topics in a way that actually makes sense, hit that like button. It helps more people find this content. All right, let's dive in. So, the phone call. Let me give you more context here because you need to understand why this matters so much. Josh Fair is the CEO of Scottsdale Mint. If you don't know what that is, it's one of the biggest private mints in America. They make silver coins and bars. They deal with massive amounts of silver every single day. This guy is not some random person on the internet making stuff up. He's in the thick of the silver industry. He knows what's moving, who's buying, who's selling. He's got sources everywhere. And recently he came out and told this story publicly. He said that around Thanksgiving, someone from China called the United States. Most likely they called JP Morgan because JP Morgan is the biggest player in the silver market. And the Chinese buyers wanted to take an obscene amount of silver out of the US. Now stop and think about this for a second. China is the world's biggest silver refiner. They process about 60% of all the refined silver on planet Earth. They've got their own mines, they've got their own production, they make tons of silver every year. So why on earth would China be calling America to buy silver? I'll tell you why. Because they're running out. Their own supply can't keep up with their demand. And their demand is absolutely insane right now. China is building solar panels like crazy. They're making electric vehicles by the millions. They're expanding their military. All of that stuff requires silver, tons and tons of silver. And despite having the biggest refining capacity in the world, they still don't have enough. So they picked up the phone and called America. And according to Josh Fair, JP Morgan answered that call. But instead of saying, sure, come pick up your silver, JP Morgan said, no, you cannot take silver from our facilities here in the United States, but we'll help you get silver from other places around the world. Now, think about what that means. A private bank, JP Morgan, is acting as a gatekeeper. They're deciding who gets access to silver that's stored in America. They're telling the second biggest economy in the world, sorry, you can't have this. That's not just business. That's strategy. That's power. That's America drawing a line and saying this resource is ours, not yours. But the story doesn't end there. Josh Fair says that ever since that phone call happened, two major things have been going on in the silver market. Number one, China has been buying silver like crazy from every other market around the world. They're going to London. They're going to Switzerland. They're going to Singapore. Anywhere they can find physical silver, they're buying it. Not paper contracts, not futures, Real, actual silver bars that they can ship to China and store in their vaults. Physical metal. The real deal. And they're paying whatever it takes to get it. Number two, and this is where it gets really interesting, JP Morgan and other big US banks have also been buying massive amounts of silver. And according to Josh Fair, they might be doing this on behalf of the US government. So now you've got this situation where China is desperately trying to buy silver, America is stockpiling silver, and there's only so much silver to go around. And caught right in the middle of this are the European banks. Banks like UBS in Switzerland, HSBC in the UK, Deutsche Bank in Germany. These banks weren't in on what was happening. They didn't know about the phone call. They didn't know that massive demand was about to hit the market. And many of them are still short silver. That means they bet that silver prices would go down. And now prices are going way up. And these banks are losing incredible amounts of money trying to cover their positions. Now, let me explain JP Morgan's history with silver, because you need to understand this to see how crazy this whole situation is. JP Morgan has been the biggest villain in the silver market for over 15 years. Back in 2008, during the financial crisis, JP Morgan bought another bank called Bear Stearns. And when they bought Bear Stearns, they inherited these huge short positions in silver. A short position means you're betting that the price will go down, and JP Morgan kept those short positions. In fact, they made them even bigger. For years and years, JP Morgan was the biggest short in the silver market. They were constantly pushing the price down using all kinds of tricks. Some legal, some not so legal, and they got caught. In 2020, the US government came down on them hard. JP Morgan paid $920 million in fines. Let me say that again, $920 million. That's almost $1 billion. They had to pay this money because they were caught manipulating the precious metals markets. The specific crime was called spoofing. That's when you place orders to buy or sell with no intention of actually completing those orders. You're just doing it to trick other traders and move the price where you want it. It's super illegal, and JP Morgan was doing it for years. But here's the crazy genius part of what they were doing. While they were keeping silver prices low with their paper short positions on the futures exchange, they were also buying physical silver at those artificially low prices and storing it in their own vaults. Think about that. They're pushing the price down with one hand and buying the actual metal with the other hand. It's like if you were selling lemonade and you went around telling everyone that lemonade is terrible and worthless, so nobody buys it and the price drops. Then you go buy all the lemonade at the low price. Eventually, when everyone realizes lemonade is actually valuable, you own all of it and you make a fortune. That's exactly what JP Morgan did with silver. They suppressed the price for years. They accumulated physical metal. They paid some fines when they got caught, but those fines were nothing compared to the profit they made. And now, according to the people who track this stuff, JP Morgan has somewhere between 650 million and 750 million ounces of physical silver in their vaults. To put that in perspective, the entire world mines about 850 million ounces of silver per year. JP Morgan has almost a full year of global production sitting in their vaults. One bank. That's not a market position. That's a monopoly. That's control of a strategic resource. So now let's get back to the present day. JP Morgan knows that China called. They know massive demand is coming because they're the ones getting the calls. They know that China desperately needs silver and will pay almost any price to get it. So what do? They close their short positions. Remember, they've been short for 15 years. They've been betting silver will go down. But now they flip. They cover their shorts and they go long. That means they're now betting that silver will go up. And because they own so much physical silver, every dollar that silver goes up, they make hundreds of millions of dollars in profit. But it gets better. JP Morgan also puts a blanket over their silver stockpile and tells China, you can't have this. Our silver is not for sale to you. And then they just let the market run. They stop suppressing the price. They stop fighting it. They let silver do what it naturally wants to do, which is go up. And as China comes into the market trying to buy silver from other sources, they're competing with everyone else, and that pushes the price higher and higher. $70 per ounce, $80, $93. And every single dollar it goes up, JP Morgan is making money. It's the most brilliant financial play I've seen in years. Ruthless, but brilliant. Josh Fair said in his interview that silver could go to $120, maybe $150, maybe even higher before it takes a breath. But he also warned that it could get smashed back down to $50 almost overnight. Why would he say that? Because he knows this market is being controlled. When one entity owns as much silver as JP Morgan does, they can move the price however they want. They can let it run up to squeeze all the short sellers and make them panic. Then they can smash it back down to shake out all the weak hands and buy even more at lower prices. They have total control, and they're going to use that control to maximize their profits. Now let's talk about what China did in response to all this, because China is not stupid. They saw what was happening. They saw that they couldn't get silver from the United States. They saw prices going up. They saw that they were being squeezed. So on January 1st, 2026, just a couple weeks ago, China made a huge move. They changed their laws. They took silver, which used to be classified as just a regular commodity that anyone could trade and export, and they reclassified it as a strategic resource. That means the Chinese government now controls who can export silver from China. You need special licenses. You need government approval, and only 44 companies in the entire country are allowed to export silver. Why does this matter? Because China exports about 121 million ounces of refined silver every year. That's roughly 60 to 70% of all the refined silver that gets traded globally. China is the factory of the world for silver refining, and they just shut the door. They basically said, okay, if you won't give us your silver, we're not giving you ours. This is economic retaliation. This is strategic resource competition. And it's happening right now. The impact of this is massive. If 70% of globally traded refined silver suddenly has export restrictions on it, that means the rest of the world just lost access to most of their silver supply. That's a supply shock. And in a market where demand is already high and rising, cutting supply in half means prices have to go up. There's no other option. It's basic economics: less supply, same demand, higher prices. But America wasn't just sitting around waiting for this to happen. They were making moves too. And this is where it gets really interesting from a strategic standpoint. Right now, there's a $7 billion silver smelter being built in the United States. $7 billion. That's an enormous project. But here's the kicker. The US Department of Defense is putting $2 billion of their own money into this project. Let me repeat that. The Department of Defense, not the Department of Commerce, not the Department of Energy, the military. The Pentagon is investing $2 billion into building a silver refining facility on American soil. And who do you think is financing the other $5 billion? JP Morgan. The same bank that controls the world's largest private stockpile of silver, the same bank that just went fully long on silver. They're the ones putting up the financing for this massive smelter. Now, why would the military be involved in building a silver refinery? I'll tell you exactly why. Because silver is not just a precious metal for jewelry and coins. Silver is a strategic military resource. You cannot build modern weapon systems without silver. Missiles use silver. Radar systems use silver. Advanced electronics in fighter jets and submarines use silver. Satellites use silver. Everything the military needs to function uses silver. And right now, the United States is dependent on foreign countries, including China, for refined silver. The Pentagon looked at that situation and said, that's not acceptable. We cannot be dependent on a potential adversary for a material that's critical to our national defense, so they're building domestic capacity. They're bringing the supply chain home, and they're making sure America has access to all the silver it needs, no matter what happens with China or anyone else. And there's more. Part of the deal for building this smelter includes agreements with South Korea. South Korea is a major producer of refined metals, and the United States just locked in supply agreements with them. So America is not only building its own refining capacity, but it's also securing supply from allies. They're building a supply chain that doesn't depend on China at all. They're cutting China out of the equation. This is supply chain competition. This is resource nationalism. And it's happening at an accelerating pace. Josh Fair said something in his interview that really stuck with me. He said, this is not just about silver going up or down. This is about strategic competition. This is about which countries will have access to the resources they need to build their economies and their militaries in the future. And right now, the United States and China are in a competition for control of silver. It's not being fought with tanks and bombs. It's being fought with export controls, strategic stockpiles, financial positioning, and supply chain dominance. But make no mistake, it's still a form of conflict. And silver is right at the center of it. Now let me show you what's happening in the actual physical silver market, because this is where things get really crazy. There's this huge disconnect between what silver is trading for on paper and what it costs to actually buy physical silver in certain parts of the world. On the COMEX exchange in New York, which is where silver futures trade, silver was showing a price of around $72 per ounce on January 1st. That's the official spot price that everyone talks about. But if you wanted to actually buy physical silver from a dealer in Japan on that same day, you weren't paying $72. You were paying $130 per ounce. $130. That's almost double. That's an 80% premium over the official spot price. Now, you might think, okay, well, there are always premiums on physical silver because dealers have to make money and there are fabrication costs. That's true. Normally, you might pay 10, maybe 20% over spot for physical silver, but 80%? That's not normal. That's never happened before in modern markets. And it's not just Japan. In Shanghai, buyers were paying $8 per ounce over the spot price just to get silver. In India, $5 over spot. In the United Arab Emirates, dealers were quoting $100+ prices. All over Asia, there were lines forming outside of precious metals dealers because inventory was disappearing. People were literally lining up on the street to buy silver before it was all gone. When you see premiums this high, it's telling you something very important. It's telling you that the paper price and the physical price have disconnected. The futures market is saying silver is worth $72, but people who actually want to hold silver in their hands are willing to pay $130. Which price is real? I'd argue the physical price is more real, because at the end of the day, you can't eat a futures contract. You can't hold it in your hand. You can't store it in your safe. If there's no physical silver available at $72, then $72 is not the real price. The real price is whatever people are actually paying for actual metal. And right now, in big parts of the world, that price is way higher than what the paper market says. So why is there this disconnect? Let me explain how the paper silver market works, because this is important. The COMEX in New York is where silver futures are traded. A futures contract is basically a promise. It's a promise to deliver a certain amount of silver at a certain price on a certain date. But here's the thing. Most of these contracts never result in actual physical delivery. Traders buy and sell these contracts, and they settle them in cash. They're just trading the price movement. They don't actually want the silver. It's like betting on a sports game. You don't actually want to play in the game. You just want to bet on who wins. The problem is that there are way more paper contracts than there is actual physical silver backing them. According to estimates, for every ounce of real silver sitting in COMEX warehouses, there are 350 paper claims on it, 350 to 1. That means if everyone who owned a silver contract said, hey, I want my actual silver, there wouldn't be nearly enough to give everyone. It's like musical chairs. As long as the music is playing and everyone is happy trading paper, the system works fine. But the moment the music stops and people demand physical delivery, the whole thing falls apart. And guess what? The music is starting to stop. People are demanding delivery. In the first week of January, over 4 million ounces of silver were physically withdrawn from COMEX warehouses. 4 million ounces in 1 week. That's a lot. And who do you think is taking delivery of all this silver? JP Morgan? They're not just buying paper contracts. They're taking the actual metal out of the system. They're converting their paper positions into real physical silver that they can hold in their vaults. And every ounce that leaves the COMEX makes the system more fragile. Because now there are even more paper claims, chasing even less physical metal. This is what people call a potential short squeeze, or delivery squeeze. If too many people demand physical delivery at the same time, the COMEX might not be able to deliver. And what happens then? They could declare force majeure, which is basically like saying, sorry, we can't fulfill these contracts because of circumstances beyond our control. And then they settle all the contracts in cash at whatever price they decide. All those people who thought they owned silver, they just get dollars. And good luck buying physical silver with those dollars when there's none available or it's trading at huge premiums. This is the nightmare scenario that some people in the silver community have been warning about for years. And it's starting to look like it might actually happen. Now let's talk about why silver is so important from an industrial standpoint. Because if you don't understand this, you're missing a huge part of the story. Silver is not just money. It's not just a store of value. Silver is actually the most useful metal on the planet from an industrial perspective. It has unique properties that you cannot replicate with any other material. Silver has the highest electrical conductivity of any element, period. It conducts electricity better than copper, better than gold, better than anything. It also has the highest thermal conductivity. It's antimicrobial, which means it kills bacteria. It's highly reflective. And it's malleable, which means you can shape it easily. Because of these properties, silver is used in an enormous number of industrial applications. Every electronic device you own has silver in it. Your phone, your laptop, your TV. The switches and contacts inside use silver. Solar panels require silver paste for the photovoltaic cells. Without silver, solar panels don't work. Electric vehicles use silver in the batteries, in the motors, in all the electronic systems. A single electric vehicle uses between 25 and 50 grams of silver. That might not sound like a lot, but when you're making millions of electric vehicles, it adds up fast. 5G cell towers use silver. Medical devices use silver because of its antimicrobial properties. Water purification systems use silver. The list goes on and on. Here's the key point. Over half of all the silver that gets mined every year goes to industrial uses. It's not going into jewelry or coins or investment. It's going into products. And as the world transitions to green energy and electric vehicles, that industrial demand is growing rapidly. The Silver Institute, which tracks this stuff, estimates that industrial demand is going to keep increasing year after year for the foreseeable future. Now, on the supply side, we have a problem. Silver doesn't come out of silver mines as much as you'd think. Most silver is actually produced as a byproduct of mining other metals like copper, zinc, and lead. If you're mining copper and you get some silver along with it, great, but you're not mining specifically for silver in most cases. This creates a supply problem because silver production doesn't respond directly to silver prices. If the price of silver goes up, mining companies can't just open a bunch of new silver mines overnight. It takes 7 to 10 years to develop a new mine from the discovery phase to actual production. And global silver reserves are limited. We're not running out tomorrow, but we're also not finding huge new deposits. So you have this situation where demand is rising steadily, supply is relatively fixed and slow to increase, and inventories are being drawn down. For the last 5 years, according to the Silver Institute, global silver demand has exceeded mine supply, meaning we've consumed more silver than we've produced. How is that possible? We're drawing down stockpiles. We're using up the silver that was stored from previous years, but those stockpiles are not infinite, and they're running low. Inventories in certain categories are at multi-decade lows. And now you add China's export restrictions on top of that, and suddenly the available supply for the rest of the world just got cut in half. So what do you think is going to happen to prices? They have to go up. Companies that need silver for their products are going to be competing with each other to secure supply. They're going to bid against each other, driving prices higher. And if they can't get silver, they can't make their products. Tesla can't make electric vehicles without silver. Apple can't make iPhones without silver. Solar panel companies can't make panels without silver. This is a huge problem for these companies. And there are reports that Elon Musk actually tweeted something like, "This is not good," in reference to silver supply issues. When the richest person in the world who runs multiple companies that need silver is worried about supply, you know the situation is serious. All right, let me connect all the pieces here because I want you to see the full picture of what's happening. You've got China, which is the world's factory and the biggest manufacturer of everything from electronics to solar panels to EVs. They need massive amounts of silver, but they're having trouble getting it. America, through JP Morgan and possibly with government coordination, has secured a huge stockpile of silver and is restricting China's access to it. Europe is caught in the middle with their banks getting squeezed on bad short positions. The paper silver market on the COMEX is starting to break down as people demand physical delivery and there's not enough metal to go around. Physical premiums in Asia are at record levels, showing that real metal is scarce. Industrial demand is at all-time highs and growing. Mine supply can't keep up. And China just implemented export controls that cut global supply by 60 to 70%. Every single one of these factors is bullish for silver prices, and they're all happening at the same time. This isn't a normal market situation. This is a perfect storm, and it's not just about making money on silver going up. I mean, yes, if you own silver and the price goes up, you make money. That's great. But the bigger story here is about the reorganization of global power structures. The countries that control critical resources are going to have leverage over the countries that don't. China understood this years ago. That's why they've been stockpiling everything. Gold, rare earth metals, copper, you name it. They've been buying and hoarding resources because they know that in the future, the countries with the resources will have the power. America is finally catching up to this reality, and they're using JP Morgan and the financial system as tools to secure these resources. JP Morgan isn't just acting as a private bank trying to make money. They're executing strategy that aligns with US national interests. Secure the resources, control the supply chains, deny access to competitors, build domestic production capacity. This is economic statecraft. It's resource competition. And silver is right at the heart of it because silver is essential for both economic production and military capabilities. Josh Fair made a point that I think is absolutely critical. He said, "What kind of assets do you want to own? You want to own the assets that the biggest players in the world are fighting over." When you see governments getting involved, when you see militaries putting money into supply chains, when you see the world's largest banks repositioning their entire strategy around something, that tells you that thing has real value. Real strategic value. This isn't some speculator pumping a random stock. This is nation states competing for control of a critical material. That's your signal right there. Donald Trump and his administration understand this dynamic. They understand that the competition between the US and China is not going to be fought primarily with traditional military means. It's going to be fought through trade policy, through tariffs, through control of supply chains, and through control of resources. Silver sits right at the intersection of all of this. The country that controls silver has a massive advantage in the technologies of the future. Solar energy, electric vehicles, advanced electronics, military systems, all of it depends on silver. And right now, the United States just made the biggest strategic move in this competition by flipping JP Morgan from a short position to a long position, by restricting China's access to American silver, and by building a $7 billion domestic smelter with military funding. Now, what happens next? Josh Fair's prediction is that we're going to see extreme volatility. He thinks silver could go to $120, maybe $150, maybe even higher in the near term. But he also warned that it could get crushed back down to $50 or even lower before eventually going back up. Why would we see this kind of volatility? Because JP Morgan and other big players can move the market however they want. They have enough physical silver and enough market power to push prices in any direction that benefits them. They can let prices run to force short sellers to panic and cover their positions. That pushes prices even higher. Then, once they've squeezed everyone out, they can smash prices back down to shake out weak hands and accumulate even more silver at lower prices. It's a game. And if you don't understand the game, you're going to get hurt. So what should you do? First, understand that if you're going to get involved with silver, you need to know what you're getting into. This is not a smooth ride. This is going to be volatile. Prices could swing 20 or 30% in a matter of days or even hours. If you can't handle that kind of volatility, if you're going to panic and sell at the first big drop, then maybe this isn't for you. But if you understand the long-term fundamentals, if you believe that silver is a strategic resource that's going to become more valuable over time, then you need to position yourself accordingly and ignore the short-term noise. Second, if you want exposure to silver, think very carefully about how you get that exposure. You can buy paper products like ETFs or futures contracts. Those give you price exposure. But as we've seen, the paper market and the physical market are disconnecting. If there's a major crisis and the COMEX can't deliver physical silver, your paper contracts might just get settled in cash. You won't get actual silver, you'll get dollars. And good luck buying physical silver with those dollars if the physical market is at a huge premium or there's no supply available. If you want real exposure, you need to own physical silver. Coins or bars that you can hold in your hand or store in a secure location where you have direct ownership, not pooled storage, not unallocated. Allocated storage where specific bars are assigned to you, or better yet, in your physical possession. Third, understand that timing is really difficult. Trying to buy at the exact bottom and sell at the exact top almost never works. What does work is understanding the long-term trend and positioning yourself accordingly. If you believe silver is going higher over the next several years, then maybe the strategy is to dollar cost average. Buy a little bit every month regardless of the price. That way you're not trying to time it perfectly. You're just accumulating over time. And if prices drop, great, you get to buy more at cheaper prices. If prices go up, great, the silver you already bought is worth more. Fourth, any investment in commodities should be part of a broader, diversified portfolio. Don't put all your money into silver. Don't bet everything on one thing. That's gambling, not investing. Have some cash for liquidity, have some stocks, have some bonds, have some real estate if you can. Diversification protects you from being wrong. And in markets like this, where there's so much uncertainty, being wrong can be very expensive. Watch what the big players are doing. JP Morgan went from being the biggest short to going fully long. That's a massive signal. When the most connected, most powerful bank in America completely flips their position on something, they know something you don't know. They have information and analysis that retail investors don't have access to. So pay attention to what they're doing. The US Department of Defense is spending $2 billion to build a silver smelter. That's another huge signal. When the military gets involved in commodity supply chains, it's not about making a profit. It's about national security. That tells you silver is viewed as essential to military capabilities, and the government is taking steps to ensure domestic supply. China implemented export controls on silver on January 1st. That's retaliation, and it's also strategic resource hoarding. They're saying, we're going to keep our silver for ourselves because we need it. Expect more moves like this, more export controls, more tariffs, more restrictions on the flow of commodities. We're entering an era of economic nationalism where countries prioritize domestic supply over free trade. That's the new reality. And in that reality, physical ownership of critical resources becomes more important than ever. Let me tell you a story from history because I think it's relevant here. Back in the 1970s, two brothers named Nelson Hunt and William Hunt tried to corner the silver market. They were billionaires from Texas, oil money, and they decided they were going to buy up as much silver as they could to control the market. They bought physical silver. They bought futures contracts. At one point, they controlled over half of the world's deliverable silver supply, and prices went crazy. Silver went from around $6 per ounce to $50 per ounce in just a few months. It was the biggest short squeeze in commodity history. But then the exchanges changed the rules. The COMEX and other exchanges raised margin requirements, meaning you needed more cash to hold futures positions. They limited how many contracts one person could hold. They changed the rules specifically to target the Hunt brothers. And with these new rules, the hunts couldn't maintain their positions. They were forced to liquidate. They had to sell. And when they sold, prices crashed. Silver went from $50 back down to $10. The Hunt brothers lost billions of dollars. They went bankrupt. Their entire fortune was wiped out. The lesson from that story is that when you're an outsider trying to corner market or threaten the system will change the rules to destroy you. The exchanges, the regulators, the government, they'll all work together to take you down if you're a threat. But here's the key difference between the Hunt brothers situation and what's happening now. The Hunt brothers were private individuals. They were outsiders. They were attacking the system. JP Morgan is not an outsider. JP Morgan is the system. They are insiders. They're one of the most powerful financial institutions in the world. They have deep connections to the government. They're executing a strategy that aligns with U.S. national interests. They're not going to get shut down the way the Hunt brothers did. If anything, the government will support what they're doing because it serves broader strategic goals. And China isn't the Hunt brothers either. China is a sovereign nation. You can't margin call a country. You can't force a government to liquidate their positions. You can't change the rules on a nation state the way you can on private individuals. This is nation competing against nation, system competing against system. And the outcome of this competition is going to shape the global order for decades to come. It's not going to be resolved quickly or easily. This is a long-term strategic competition. And silver is one of the key battlegrounds. Josh Fair said in his interview that the price of metals is resetting to new levels. He said we might see a lot of volatility in the short term, but he's not concerned about the long term. He thinks if you're dollar cost averaging, if you're buying regularly over time, the prices you're paying now are going to look cheap in a few years. Prices are probably going much, much higher over the next several years. I think he's right about that. The fundamentals support much higher prices. But the path to get there is going to be chaotic. You're going to see big swings, big drops that make you question everything, big rallies that make you euphoric. You need to be mentally prepared for that. You need to understand why you own silver so that you don't panic during the inevitable volatility. Let me address some of the hype and misinformation that's floating around out there because I want you to be able to separate fact from fiction. There are people online claiming that banks are collapsing because of silver shorts, that JP Morgan is getting bailed out by the Federal Reserve, that the entire financial system is on the verge of collapse. Some of these claims are based on misinterpretations of data. Some are based on speculation. Some are just outright false. Yes, the Federal Reserve did increase repo operations around year-end, but that's normal for year-end liquidity management. Banks need cash at year-end for regulatory reporting and other reasons. The Fed provides that cash through repo operations. It's routine. It's not evidence of a bailout or a crisis. Yes, silver price volatility does create stress for banks that are short. If you're short and prices go up, you're losing money and you have to post more margin. That's real. But there's no confirmed evidence of major bank failures or systemic collapse in the silver market. At least not yet. What is confirmed is that JP Morgan appears to have flipped from short to long based on analysis of CFTC data. What is confirmed is that China is trying to secure large amounts of silver. What is confirmed is that China implemented export controls on January 1st. What is confirmed is that physical premiums in Asia are at record levels. What is confirmed is that COMEX inventories have been declining as people take delivery. Those are facts. The speculation about imminent bank collapses and bailouts may turn out to be true eventually, but right now they're speculation. Base your decisions on facts, not rumors. The $7 billion smelter project is real. The U.S. Department of Defense is really investing $2 billion into it. JP Morgan is really involved in the financing. These are facts that you can verify. This project is not about commercial profit. It's about strategic security. The military needs silver, and they're not going to depend on China or any other country for it. They're bringing the capability on shore. They're building a supply chain that's independent of potential adversaries. If you understand why the military is doing this, you understand why silver is important strategically. Josh Fair said, you can't use paper. People want physical, tangible metal in their jurisdiction. They want it in the US. They want it in China. The input materials are being squeezed. Concentrate coming out of places like Venezuela is being cut off. China is worried about getting raw materials for their manufacturing. The United States is going to control resources in Latin America. They're going to secure access to everything from Venezuela to Brazil and beyond. This is securing resource. This is big countries using their power to control the resources that smaller countries have. And the United States is going to do everything it can to make sure it has access to the silver, copper, lithium, and other materials in Latin America. Because if America doesn't control those resources, China will. And America can't let that happen. You need these resources to build military hardware. China is getting squeezed on the input side, meaning they can't get raw materials as easily. And they're getting squeezed on the physical side, meaning when they try to buy finished silver, they have to pay huge premiums and compete with everyone else. They're facing pressure from both sides. They can't get the raw materials to refine silver themselves. They can't buy physical silver on the open market without paying way more than everyone else. China faces strategic challenges, and they know it. That's why they implemented the export ban. That's why they're hoarding everything they can. They're prioritizing resource security. They're trying to secure enough resources to keep their economy and military running. The United States is in a competition with China. And Trump and his team understand this better than previous administrations. They understand that this is not just about trade deficits and tariffs. It's about control of resources, control of supply chains, control of the critical materials that determine who has power in the 21st century. And silver is at the absolute top of that list. Solar panels, electric vehicles, advanced electronics, military systems, all of it depends on silver. And America just made a power move. They positioned JP Morgan to control supply. They restricted China's access. They're building a $7 billion smelter with military money. They're securing supply from allies like South Korea. These are not random business decisions. This is strategy. This is economic competition, and it's happening right now. So let me bring this all together. A phone call happened on Thanksgiving night. China wanted an obscene amount of silver from the United States. JP Morgan said no. But more importantly, JP Morgan flipped from being the biggest short in the silver market to going fully long. They positioned themselves to make billions of dollars as silver prices go up. They blocked China from accessing American silver stockpiles. They're involved in financing a $7 billion smelter that the US military is partly funding. China retaliated by implementing export controls on silver, cutting off 60 to 70% of global refined silver supply. Physical premiums in Asia exploded to 80% over spot prices. COMEX inventories are being drained as people demand physical delivery. European banks that were short silver are getting crushed. Industrial companies that need silver are panicking. And prices are going vertical. This is the setup. This is the perfect storm. And we're just at the beginning of it. What do you do with this information? If you understand the fundamentals, if you believe that silver is a strategic resource that's going to become more valuable, then you need to own some. Not all of your money, but some. Physical silver that you can hold or that's stored in allocated storage where specific bars are assigned to you. Not paper, not ETFs that might not be fully backed. Physical metal. And you need to be prepared for wild volatility. This is not a smooth ride to the top. There are going to be massive price swings that will test your conviction. You need to ignore the short-term noise and focus on the long-term fundamentals. Governments are hoarding silver. Militaries need silver. Industries can't function without silver. Supply is tight. Demand is rising. Those are the facts. As long as those facts remain true, the long-term trend for silver is up. Josh Fair's final point, and I think this is the most important thing he said, is that you want to own the assets that the biggest entities in the world are fighting over. When you see governments involved, when you see militaries involved, when you see the world's biggest banks completely repositioning their strategies, that's your signal. That's how you know something is truly valuable. Don't buy paper garbage that can be printed or created out of nothing. Buy tangible assets. Physical silver. In the right jurisdiction matters. Strategic competition is happening right now, and silver is at the very center of that competition. This is real. This is not hype. This is not speculation. This is what's actually happening in the world right now. And most people have no idea because this isn't widely discussed in mainstream outlets. Thanks for watching The Hidden Economy. If this opened your eyes and helped you understand what's really going on, do me a huge favor and hit that like button right now. Share this video with friends and family who need to see it. The more people who understand what's happening with silver and strategic resources, the better. Subscribe to the channel if you haven't already and turn on notifications because this story is developing rapidly. I'm going to be covering every major move, every development, every twist and turn. Drop a comment below and let me know what you think. Do you think JP Morgan made a brilliant move, or are they playing with fire? Do you think China is going to find a way to secure the silver they need, or are they truly cornered? Are you personally buying physical silver based on this information? I read every single comment and I want to hear your perspective. Until next time, stay informed, stay strategic, and pay attention to what the big players are doing. Because in this game, the big players always know something the rest of us don't. The silver war is on, and how it plays out will determine a lot about the future of the global economy and who has power in the decades to come. See you in the next one.